What's up, y'all? Not the Wealth John here, aka the Cigar Emperor. Hey, I don't know if y'all been following, but what just happened in the financial world with Silicon Valley Bank? Regulators basically had to shut it down. It was, matter of fact, it's been called the biggest bank failure since 2008. But everybody that deposited in the bank, the headquarters in Santa Clara, California, but everybody that made deposits to the bank will be able to get their money tomorrow, the 13th, which is good. So the taxpayers won't bear no burden on that. But the bank man was doing great for a while. It was doing great for a while. It's one of the biggest banks in the tech world. Period. So, but what really got it in trouble was what basically get everything in trouble. Institutions like that, money institutions like that, is when you kind of short-sighted, and even the best financial experts can't tell all the time, but they were short-sighted on basically the stimulus payouts over the last couple of years, and what the Feds had to do by doing all these interest rate hikes. So how that works is when the Feds have to try to fight inflation the best way they can and raise interest rates and with these interest rate hikes, that means that a lot of the investments that Silicon Valley Bank had out, even though they did have a cash surplus, like most bank institutions need always have a cash surplus, but it failed them because they had so much out, had so much investments that was out that it hurt these interest rates. So the regulators had to come and actually shut them down. Now, I just spoke about this a couple of days ago about how to protect your money. Even though they was and simply they was, of course, they was FDIC insured, but this is something that working people, especially working people, you have to pay attention to. You First of all, you definitely, if you're gonna keep your money in the bank, you definitely want to make sure it's FDIC insured. Also, even if you're investing in stocks or ETFs and bonds, you want to make sure whatever brokers you're using, you want to make sure that FDIC insured up to whatever amount you have in there. Most banks is going to insure your money $250,000. The basketball player, and y'all know what I'm talking about, play for Milwaukee Bucks, the Greek Freak he's out of Africa but played ball in Greece. He has about 50 different banks with $250,000 in them apiece. Smart move, because you have to pay attention to the rules and the black and white on these agreements that y'all signing. This goes along with any type of credit card companies, everything. But the only way to ensure and to protect your money, because you can't depend on Social Security, is to invest. Invest in places that you know that your money is going to grow. But at the same time, you still have to protect those investments by understanding the agreements. How much money can you put in there that'll be insured? If you got $500,000 in a bank that only insures $250,000, you can have that $500,000 in there. But look, if something like this happens, I mean, there's no way you can actually make them pay you back the other $250,000. So you have to be careful with that. And just because it's a big bank, and you're talking about Silicon Valley Bank, I mean, that was a big bank. But you see, they failed too. So you have to be careful about where your money is at, how much money you got in those particular banks. I mean, if you got $10,000, $15,000 or less or whatever, then 9 to 10 you got to worry about it. But I'm talking to the investors, those who trying to make their money grow and not trying to depend on Social Security, because we don't know where Social Security might be in another 10, 15 years. You have to create another way of money generated into your household. You have to create generational wealth. But at the same time, you have to be smart about the institutions that you're using, because this is a good example of how inflation and Federal Reserve interest hikes can hurt things. And I'm sure a lot of y'all who possess a 401k, who've had a 401k for a while, y'all see how that works. Y'all can see how you look into your 401k. So if you had one for years, you see how interest rates, your money will drop real low because your money just sitting in the 401k. It ain't doing nothing. This is just your retirement money. This is why you have to expand past 401ks. You have to get the Roth IRAs. You know what I mean? Something that you don't have to pay taxes on again. Something that you can leave to your family when you leave this earth without it being taxed again. Also, Roth IRAs have a much better protection against stuff like this than a regular 401k. So I just wanted to, those who are not familiar with what happened with Silicon Valley, go look it up. I mean, it's on Google. They'll tell you how they collapsed. But like I said, the government came back. They put in this system in to where everybody who was had money in Silicon Valley Bank, they get all their money back tomorrow. So I just wanted to make this video and tell y'all about that. Peace out.